Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for June 13th, 2018. Well, today is the big show. Today we have the FOMC announcement at 2 p.m. So what do we do when we have big events like that? Well, I can tell you, as for me, I'm going to largely avoid the uncertainty of the FOMC announcement. Remember, they're doing an announcement and a forecast today, and it'll be the announcement probably won't create a whole lot of fireworks. Everyone is largely expecting a 25 basis point increase. Where the fireworks will likely come in is in the forecast. If the FOMC comes off as being more hawkish, expecting additional interest rate increases into the future, the market likely will respond negatively to that. If they come off as more hawkish, saying, hey, we're going to hold off, we're not going to add any additional at the moment, the market will view that as a little bit dovish and will respond likely positively to that kind of news. So here's the thing. We don't know what they're going to do. And to assume that we do, or to step into the fray would be a little bit like playing chicken with a train. So my tactic for doing that is I look at my profitable trades and I plan to reduce my risk ahead of the FOMC announcement, and I don't plan to add any additional risks today. Now, for those of you who might be day traders, there's certainly going to be opportunities for day trading, but for those of us that are swing traders and things like that, there's such a big unknown out there how the market might react to this news. Just sitting on the sidelines might be the better course of action. So consider that as you plan your risk forward. There's really nothing we can do to protect ourselves during an FOMC announcement. They can move this market really fast. So be careful ahead of it. Currently, I have to give the bulls control here. We continue to maintain control. The bulls are holding up. The momentum of the market isn't remaining up. Now, we did have a little bit of challenge, a little bit of pulling back, a little bit of choppiness yesterday in the diamonds as we dealt with this level of resistance. But as of yet, there really isn't anything here that would suggest bearishness is coming in. And as you can see this morning, we're getting a little bit of a market pop this morning. The futures are pushing us just slightly higher this morning. Let's take a look at the SPY. The SPY did just a little bit better, once again challenging this resistance level here, but not being able to find enough energy to break through and just largely chopping sideways, waiting. I think the overall market is just waiting on the FOMC, trying to decide where we're going to go from here. So notice on both of these indexes, both the diamonds and the SPY, we have the potential of failing at resistance or the possibility of popping through. Your guess is as good as mine. And as you know, I try to do these with a complete unbiased look at the market. I do not try to predict. I don't want to predict the market. I simply want to follow it when it starts moving in a direction. Right now, it's a coin toss. It's a coin toss as to which way we'll go after the FOMC. Let's take a look at the Qs. Now, the Qs did much better yesterday. Pushing, almost making that new high. Coming very, very close to that new high. Q's looking strong, holding up well. It's nice to see the bulls responding back, pushing up. Trend is still definitely in place here. So all is well here right now with the Q's. So we have a little bit of a contradiction, I guess I should say, to what the diamonds and the SPY are showing us. This is showing us continued strength, and nothing here right now suggests bearishness. Let's take a look at IWM. IWM pushing out to new record highs, looking really, really strong here, continuing its trend. Once again, no bearishness here. So we have two indexes showing us just a little bit of reason for caution, a little bit of choppy sideways move, and two indexes showing us bullishness. So with that, we still have to give this to the bulls. The bulls are in control. Trend is still strong. Everything is looking good, but there is reason for a little bit of caution. So kind of put that into your mix when you're thinking about your day, how we're going to deal with the big news of the FOMC, how the market might react, and how much risk you want to be carrying forward into that big announcement. On the economic calendar today, other than the FOMC, we have PPI here this morning at 8:30 a.m. Just know PPI does and can move the market around substantially. And then we also have the EIA Petroleum Status Report, which has been helping to hold those oil prices strong. And we always want to watch that closely because that can definitely move the market as well. Keep in mind the Fed announcement and the Fed forecast are at 2 p.m. Eastern today. And then the Fed chair comments to the press are at 2:30. So expect those fireworks to continue for a period of time as the market tries to digest the direction of the FOMC. So keep that in mind as we move forward. We've got about 26 companies reporting earnings today. I don't see any there that would be what I would consider market moving reports today. So yeah, they'll be moving. There'll be a little bit of movement, but don't expect much. Now, what we might want to pay attention to, and what is rather normal for the market, is that during an FOMC announcement, we might get a morning rush, and that's that first 10 or 15 minutes of the morning where folks are reacting to the market, and markets are pretty quick in their price action for that first few minutes. But then we might see the market slow down dramatically and kind of get choppy and stale right up to the FOMC announcement. After that FOMC announcement, look for really wild price action and very fast prices as the market tries to absorb that new information. On the VIX here, what's interesting in the VIX is that the VIX is not showing us anything. The VIX seems to be completely content with where it's at, just chopping sideways here. Holding above this big downtrend line, we're a 12 handle, remarkably low. Not a lot of fear going on here, but remember that can quickly change. And the FOMC day is one of those days that could quickly move the VIX. So keep an eye to the VIX. That might help you identify which way this market is going to go after the market reaction. Remember, the market will typically react in both directions. So if you watch a short-term intraday chart, we could get a big pop up and a complete reversal of that on the next candle. So just keep in mind that we often get big price reactions both ways before we kind of settle in. So watch that close. Let's take a look at T2122. T2122, the 4-week new high, new low ratio. And you can see we're up here toward that bearish reversal zone, but we're not pegged up here at the top. We still have room to go up. So there's nothing here really suggesting that we absolutely have to fall, but just know that we're getting close to that high area where profit taking could begin to come in, and maybe it's that FOMC day that kind of kicks that off. So keep that in mind as you plan your day. Let's go back here and take a quick look at this chart, and just know that if we were to set up a consolidation in here, and that's something a lot of people kind of forget about, is that the market moves in three ways. It can move up, it can move down, it can move sideways. Two of these moves I consider bullish. If we move up, obviously bullish. If we move sideways, I think that says a lot for the bulls, the strength of the bulls, maintaining the trend. So if we move sideways, that's okay, and that would be bullish as well. It's whether or not we fail at this resistance level up here that will be key. And that's what we're going to have to watch for today and really into the future if we don't do a whole lot of moving around today. A failure here could be key. Now, what we want to see is if we do pull back, we want to hold above that 25,000 level and look for support in here so that we can rally back off of it. It is entirely possible that we can move all the way into the trend before we move. Notice how the markets typically move, and this is how stocks typically move. We move up, we come back, and we test. We test support, we test the trend. And so that would not be out of the question here. So kind of, anything is possible right in here on an FOMC day. So think about that. Like I said earlier, I intend to reduce my risk ahead of that, and I do not plan on adding any additional risk until I kind of start to see a direction in the market after that FOMC. So everyone, I want to wish you a fantastic day. I want to wish you great profits. And if this is the first time you've seen this video or this information from us, please do me a favor. Click that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons and drop a comment. I do appreciate that. And always feel free to share this video with any friends or family. Also, if you'll notice in the description below, there is a link back to the morning note. I write a morning note every morning. Everyone is welcome to that. It's free. Please feel free to follow that link back and take a look at the morning note. I want to wish you all a great day. We'll talk to you all very soon. Take care. We'll see you bright and early Thursday morning.